Hello everyone, welcome back to my channel. So this video is about the wrap up of week 4 of this road to 200k challenge. This week ended up being pretty positive for the overall markets. Of course, I think most of our positions went pretty much in our favor, apart from one exception which I will get a bit later. But to give you a bit of an overview of what happened during the week, SLOD had a drop of around 4% early in the session on Tuesday, after earnings being released on Monday, despite having more than double the earnings estimates by analysts. And so I wonder why there was this reaction in the market. But because of the 4% drop in the stock price of SLOD, the calls that I had sold last week came crashing down. Basically, the value of them was highly depreciated. And so even though I sold those calls at 1.55 each, which of course gives me $155 per each call, I decided to go ahead and buy them back at just 5 cents each, or rather $5 each call, which will gave me a very good profit, even though I haven't recorded yet in our scoreboard, but we will see how much profit I managed to get. And so I decided to go ahead and sell other calls, but at the same calls, but at a lower strike. Instead of 100, just 98, which is my average cost of acquisition of these 600 shares. And so by doing so, I still get additional premium out of those shares. And also, when I did this, when I sold these calls at 98, I recall that the probability of profit was around 99%. And so there was a 99% that the calls would expire worthless. So I was fairly confident that I would keep the shares, and here they are. The calls were not exercised and still expire worthless. On Wednesday, nothing special happened. I recall that the markets also went normally. I think the market closed slightly up, but there was nothing worth mentioning in terms of our portfolio. On Thursday, markets rose again, and as a result, the 9 puts that I had on Lyft right here just fell down to 1 cent. So I took the chance to buy them back and use the collateral to sell one put on SLOD. And why is that? Simply because at that point in the week, most of the puts that I could consider selling, for example, HIMS or Lyft, were offering a lesser profitability. So the ratio between the collateral and the premium. And so the SLOD put at the time for, I guess it was for the 90 strike price put, it was probably the highest profitability opportunity that I had. So I went ahead and sold one of those. And so for Tuesday, that was pretty much it. And again, on Friday, nothing also remarkable happened. The market rose again, as you can see right here, and this is quite a positive. This was a quite positive session, and so because of that, the puts that I had simply expired worthless. There were no assignments on the puts, and also the calls that expired this week also expired worthless. So overall, it was a pretty good week. So let's go ahead and record our trades in the scoreboard and see how they went. Let's just go to the screen for the trades. And so these were the trades for Monday, and so those ones are already on the scoreboard. Let's just start right here. As you can see, I bought back the calls of Estée Lauder. All right, I bought back at 5 cents each, and I still managed to get in this case a credit in terms of the commissions. And so let's just go ahead and close this position. As you can see right here, I managed to close the position at 5 cents, and I managed to get a credit of 272. All right, and I managed to close the position. As you can see, this gave me a profit of $900, which of course it is quite good. By the way, the position was closed here on August the 20. All right, so let's just put it here, close on the 20th. Right, so let's just push this formula right here. Right, so it was in 8 days. As you can see, it was still a pretty good profit, a pretty good rate of return, around 70% annualized. So this was pretty good. Let's go ahead and see the other trades that I did. So as I said, I managed to sell other calls, but instead of 100 strike was 98. Of course, we'll also get some premium out of it. I managed to sell them at 7 cents, and I still managed to get credit in the fees and commissions. So also another positive trade, I would say. All right, so let's just copy this. Right here, it's 98, and this trade also took place at Tuesday, if I'm not mistaken. Yes, this also took place on Tuesday. All right, so let's see. And this also closed yesterday. It expired worthless. These were 6 calls, and the position was created. I received at 7 cents per premium. I received a credit of 1.5, and it simply expired worthless. Right, so I managed to get a lesser profit, as you can see right here, but of course also given the fact that, as I said, I could, with the stocks available, I could only sell calls. With the stocks that I had, I could only sell calls on Estée Lauder. So, and because my average cost of acquisition was 98, I was not willing to try to get more premium by selling a call with a lower strike price, because of course it could happen that it would be a sign and I would have a capital loss. So I decided just to get this additional premium out of it. Of course, the rate of return is lousy, but it was the best that we can do, given that this was the average cost of acquisition of the shares. So moving on to the next one, as you can see right here, I managed to buy back the puts on Lyft, and so I bought them at 1 cent each. I paid a 2.58 commission, and so here, also in here, expired worthless, 0.1 and 2.58, if I am not mistaken. Yes, this is absolutely correct. The position was closed, right? And I used, as I mentioned before, I used this collateral to sell a put on Estée Lauder with a strike price of 90. And so I received 25 cents and I paid a 1.05 commission. Let's just put this right here, just so that we do not forget this. 1.05. This was also here. Again, there's a mistake here. Yeah, because this was also, yeah, this was on the 22. As you can see, this was not on the 23. So this is something also to keep in mind, because this was on the 22. And here, let's copy it right here. and this also expired on the 23rd. The strike was 90. This was a cash covered put. This also expired on Friday. It's one put, and this expired worthless. So we managed also to receive, this is a very good rate of return, of course, because this was only for 1 day, and so this was pretty good. All right, again, as you can see here, this is also the trade that I did as well. I managed, because when I sold this put, I ended up with a little bit of buying power, and so the one put that I could actually sold with the best profitability, or should I say risk-adjusted profitability, was a put on 4 with a strike of 10.5, because the stock at the time was at 10.90 when I did the trade. I felt, all right, this is Friday, and with the stock price at 10.90 something dollars, I felt that it was very low probability that it would fall back to 10.5, even though I would not mind that, because that would lower my average cost of acquisition. So I decided to go ahead and make the trade. I received the premium 4 cents, and I received the commission 145. So let's just put in here, this is actually 10 here, and so this was the trade on Friday. It expired the same day, and effectively expired also worthless, and we received 4 cents, and we managed to get also with a commission of 145, and of course this expired worthless. Right, very good. And as you can see, these trades are still open, but they only expire only next week, so we have to wait and see what happens with those. And now these are all the trades for the week that I did, and now the positions on the puts and the calls that expire this week. Basically, the HIMS put expired worthless, so I get to pocket the premium, which is always nice, even though I would not mind to have bought the shares, because that would lower my average cost of acquisition. But yeah, that's the way it is. And also the calls here on Pfizer also expired worthless, as you can see right here. So the covered call also expired worthless here. Actually, mistake. All right, as you can see, I managed to get a pretty good return also out of these. All right, and also this put on American Airlines also expired here, worthless, as you can see. So I pocketed basically the premium, which is always good. Again, I would also not mind that I would bought the shares at this price, because it would also lower my average cost of acquisition. Apparently this is not copy the formula, but now yes, again another good profit. And this is it. All right, so because this put also expired worthless, this put on SLOD also expired worthless. Yes, as you can see right here. And so basically this is it. All right, and this call on SLOD also expired worthless, and I also managed to put here the result. All right, so all in all, this was a quite good week, and basically I managed to get some good profits this week, and basically we now have to wait for next week to see what happens, but for the time being we're good now. And this is something that I wanted to tell, is that I'm quite concerned about the stock that I have on 4. And why is that? Because as you can see right here, I managed to sell a call with a strike price of 11, as you can see right here, but because the price is already at 11.27, this call is already in the money, and so I'm bound to sell the shares at 11, even though I bought them at around 13, which is something that, of course, it's not good, and probably I will have a capital loss in here. I'm still considering whether it's going to be worth it or not to buy back to buy back the call. Even though I will take a loss, it will be nowhere near the loss that I would have if I would have to sell the share at 11. But this is something that I will consider as the week progresses next week. And so yeah, basically that is it. All right. And by the way, just for reference here, I managed, this is a mistake because here this expires on the this put on 4, as you can see right here. This is something, this put only expires on the 30th, so that's why this is not yet expired. This was a mistake of mine, yeah, because for some reason some of the things were not adding up, but yeah, now it is absolutely correct. And basically this is it for today. As always, on Monday I will be putting in additional trades. For the time being, things are going pretty good in terms of realized gains or losses. We are close to 7,000, even though of course for the time being we are still with a net liquidity of close to 106, because we still have several unrealized losses right here, as you can see on the stocks, because the stocks have not yet recovered to the price of acquisition. But nonetheless, I'm pretty positive that at some point we will be able to either lower the average cost of them, and or we will be able, by selling enough calls on them, we will be able to lower the price to a point in which, even if we have to sell with the capital losses, with the premium that we already received, we will be able to get out of the trade breaking even. But this is something that we will need to consider later on, and we will see how the market progresses from here on in. So, but for the time being, this is it. Feel free to leave your comments below. Send me any suggestions if you want to see me discuss any additional topics related to this challenge. And feel free to also to subscribe and connect with me on LinkedIn. And I'll see you all in the next Monday.